Hello guys, welcome to Study Easy Mate. Today we will be solving 100 most important MCQs based on the previous year question papers from various competitive examinations, mainly on accounting principles. Okay, let's get started. For the first question, according to the accounting standards, which principle requires a transaction should be recorded at the original cost? So we all know that if original cost is involved, it is always historical cost principle. It is because it is also called as cost principle or original cost principle. We know the other names, right? So let's move on to the next question. The concept that requires expenses to be matched with related revenues in the same accounting period is called matching concept. See, we have a clear clue in the question, matched, right? So let's move on to the next. Third, under which accounting convention would you create a provision for doubtful debts? It is either consistency or conservatism, because you might get confused with these two. So what would be the answer? It is conservatism. And what is the other name for conservatism? It is prudence, right? What it is, what does a conservatism convention deal with? It requires accountants to exercise caution when dealing with uncertainties, right? And to choose the option that is least likely to overstate assets and income. So the conservative approach will always require creating provisions based on past experience and current economic condition, ensuring that assets are not overstated. So, what will be the answer for the fourth question? The going concern concept assumes that going concern. What does it mean? It means the business will continue to operate for the foreseeable future. In case if you're not clear with any of the concepts, please get back to our previous videos. We uploaded 5 videos explaining each and every concept in the best way possible. So you can refer to the previous videos. Go to the playlist section and you can see the accounting principle playlist and you can find the videos. So what is a going concern concept? It is a fundamental accounting assumption that presumes a business will continue to operate indefinitely or at least for the foreseeable future. Okay, at least 12 months from the balance sheet data. So that is what it is. So question number 5, which of the following is not a fundamental accounting assumption? What it is? Is it accrual basis or going concern or consistency or monetary unit? The answer is consistency. Why? Because it is an accounting convention or principle, not a fundamental assumption. So what are the other threes? Accrual basis, going concern, monetary unit assumptions. They all come under accounting convention or principles. So question number 6, the revenue recognition principle states that revenue should be recognized when it is earned and measurable. Why? Earned means the company has substantially completed what it must do to be entitled to the benefits represented by the revenues, right? Measurable means the amount of revenue that can be reasonably determined. So this principle will ensure that financial statements reflect the economic reality of a business transaction and provide better matching for revenues with related expenses. So what is the answer for question number 7? The concept of substance over form means, what does it mean? Economic substance take precedence over legal form. Why? The concept of substance over form requires accountants to look beyond the legal form of transactions and to focus on their economic substance, or say commercial reality. Okay, for example, in a lease arrangement that transfers substantially all risk and rewards of ownership to the lessee. So the transaction should be treated as a purchase, like a finance lease, okay, rather than a rental or operating lease. So question number 8, which accounting principle requires that all material facts should be disclosed in financial statement. This is quite easy. Disclosed. Just look at the keywords and try to find out the answer. You won't be getting very tough questions on accounting principles. Mostly it would be all very basic. So try to be very clear with the concepts. So the answer will be full disclosure principle. What does it mean? That means financial statements should disclose all material information that would affect users' decisions. Okay, so question number 9. The money measurement concept states that only monetary transactions are recorded. It is a fundamental accounting assumption, right? That only transactions and events that can be measured in monetary terms are recorded in the accounting system. This means that, say, qualitative factors like employee morale or customer satisfaction or management competence or brand recognitions are not recorded because they cannot be reliably measured in monetary terms, right? So this concept provides objectivity and measurability to accounting records, but also creates limitations. So under accrual concept, expenses are recognized when they are occurred, because the accrual concept requires transactions to be recorded when they occur, when they are incurred, or not when the cash changes hands, right? So, what would be the answer for the 11th? The dual aspect concept. That means double entry system. It is the basis, right? Because we know that assets is equal to liabilities plus equity. So, every transaction would maintain this equation balance, ensuring the book of accounts always balance each other. So, the dual aspect concept is the foundation for the double entry bookkeeping system, because every transaction has two aspects, a debit and a credit, and it affects two accounts. So that is the main logic behind it. So what will be the answer for the 12th? Which principle requires that same accounting methods should be used from period to period? That is consistency, same accounting methods. Just look at the words, because that requires, is that once a business chooses an accounting method or principle, it should continue to use the same method from period to period unless there is a valid reason to change. So, 13th one, the business entity concept treats business and owner as separate entities. This is the main basic that you should remember, okay? Because it always treats the business as a separate entity from its owners. This means business transactions are recorded separately from the personal transactions of the owner. So 14th will be depreciation is charged on fixed assets based on which concept? So it is based on A and C, matching concept and realization concept, because depreciation is charged on fixed assets based on these two concepts only, because matching concept requires that a cost of an asset should be matched with the revenues it generates over its useful life, right? So the cost concept provides a basis for recording the asset at its historical cost, which is then systematically allotted over the asset's useful life through depreciation. Okay, so 15th will be the materiality concept suggests that only significant items need separate disclosure. Why? Because only items that are significant enough to affect decision making need separate disclosure or treatment, which means the items that are immaterial may be treated in a simplified manner or combined with other items. An item is considered material if its inclusion or exclusion would influence the economic decisions of users of financial statements. So let's move on to the 16th question. 16. Which of the following violates the consistency principle? Changing depreciation method without disclosure. Why? Because while businesses can change accounting methods when there are valid reasons, say such reasons or changes must be disclosed along with their effects on financial statements. Consistent application of accounting methods ensures comparability over time. So, changing depreciation method without disclosure will definitely violate the consistency principle. So 17, the concept that assumes stable purchasing power of money is stable monetary unit. Connect the terms. Because why? The purchasing money remain stable over time. So this assumption will underlie the use of historical cost accounting and allows for the addition of monetary amounts from different time periods. However, in reality, inflation affects the purchasing power of money, which is a limitation of this assumption. Okay, so question number 18. Under conservative accounting, so, which is the right one? All gains are recorded when earned, losses are recorded when probable, all profits are recorded in advance, all expenses are ignored. Here, losses are recorded when probable. Why? Because conservative accounting follows the principle of anticipate no profit but provide for all possible losses. Always they accept you to expect for the worst, right? Under this approach, probable losses are recorded even if they haven't been realized, while gains are recorded only when they are actually realized. So this ensures that financial statements do not overstate the financial position of the business, right? So 19th one, the periodicity concept requires division of entities' life into accounting periods. So the periodicity concept is also known as time period assumption. It requires a division of entities' continuous life into specific accounting periods, usually 1 year, okay, for the purpose of measuring performance and financial position. This enables stakeholders to receive timely information about the business and make periodic comparisons. Okay, so 20. Which concept justifies the non recording of owner's salary in a proprietary firm? So what would be the answer? It is business entity concept. You please pause the video and try to understand all the four options. Okay, if I try to explain each and every option, I think the video would not end in 2 hours because I don't want to make the video very lengthy. So I'm just leaving it to you. Just take your own standard books for reference, whichever book that you are using based on any institutes or coaching or by any mentor. Just follow one standard book and try to revise it. Okay, so for the 20th one, why it is a business entity concept? Because it justifies the non-recording of owner's salary in a proprietary firm. How? Because it treats the business as a separate entity from the owner. Since the owner and the business are considered separate, any payment to the owner is treated as drawings or withdrawal of capital rather than an expense of the business. So the next one, the accounting equation, assets is equal to liabilities plus equity, is based on dual aspect concept. I think we saw this in one of the previous question just now, right? So what is a dual aspect concept? This concept states that every transaction has two aspects and affects the accounting equation. This equation must always remain in balance, reflecting the dual nature of all business transactions. So 22, closing stock is valued at cost or market value, whichever is lower. This follows conservatism concept. Why? The rule of valuing stock at cost or market value, whichever is lower, follows the conservatism concept. This approach ensures that potential losses from declining inventory values are recognized immediately, while potential gains from rising values are not recognized until realized through sale. Right? So 23, which accounting standard deals with revenue recognition? That is AS 9. So what is AS 9? It is a accounting standard 9, deals with revenue recognition in India. This standard provides guidance on how and when how much revenue should be recognized in financial statements. It covers various types of transactions, including sale of goods, rendering services, use of enterprise resources. Okay. AS 9, that is Accounting Standard 9. It deals with revenue recognition. So 24, the concept that requires recording of transactions at the time they occur, that is accrual concept, at the time they occur. regardless of when cash is received or paid. Okay, so this will form the basis of accrual accounting, and it also ensures that financial statements reflect all transactions that occur during the accounting period. So what is the 25th one? Bad debts should be charged to the period in which sales were made, not when they become bad. So this follows matching concept. Why? Bad debts should be charged to the period in which sales were made, not when they become bad, right? So it follows the matching concept. So this will also ensure that the expense of bad debts is matched with the revenue from the sales that generated those debts, providing a more accurate picture of profitability for each period. So for 26, which one of the following is a limitation of the money measurement concept? So that is option D, all the above, because all the mentioned options are limitations of the money measurement concept. How? It records only monetary transactions, it ignores qualitative factors, and it assumes stable value of money. How, if you want me to explain, probably, yeah, for only monetary transaction means excluding non-monetary but valuable assets. So for qualitative factors, it will be like employee morale, customer satisfaction. So assuming stable value of money, it would be which is not realistic due to inflation. So 27, the principle of lower of cost or market value for inventory valuation is based on conservatism principle. So the principle of lower of cost or market value for inventory valuation is conservatism principle, because it ensures that the potential losses from declining inventory values are recognized immediately, while potential gains are not recognized until realized, right? So 28, prepaid expenses are treated as assets because of matching concept. Why? Because these expenses will benefit future accounting periods. They are recorded as assets and gradually charged to expenses as the benefits are consumed, right? Ensuring proper matching of expenses with related periods. So 29, outstanding expenses are shown as liabilities due to accrual concept. Why? Because this concept requires recognition of expenses when they are occurred, regardless of whether payment has been made. Outstanding expenses represent obligations that have been incurred but not yet paid. So 30, the assumption that business will continue indefinitely is called going concern assumption. It's very easy, right? Because it will continue indefinitely or at least have a foreseeable future. This question is quite repeated from the previous MCQs that we saw, right? It is also a fundamental to accounting as it affects how assets are valued, how liabilities are treated, and how financial statements are prepared, right? So 31, which concept requires that revenue should be recognized only when it is realized? That is realization concept. Why? Because this means revenue is recognized when goods are delivered or services are performed, not when cash is received or when the orders are booked. So 32, the separate legal existence of a company is based on entity concept, because this concept treats the business as a separate entity distinct from its owners, which is particularly important for companies that have separate legal status from their shareholders. 2033, providing depreciation on machinery follows which concept? So 33, it would be C, both conservatism and matching. Providing depreciation on machinery follows both conservatism and matching concept. This we saw it in the previous question. The concept is being carried over. So 34, the assumption that enables preparation of financial statements. So that is periodicity. And we also saw the other name for it. What is it? Time period assumption, right? So what does it do? It enables preparation of financial statements at regular intervals by artificially dividing the continuous life of a business into specific accounting periods for measurement and reporting purposes. So, yeah, which principle suggests anticipate no profit but provide for all losses? I think we saw this also in another question. It was the concept is being repeated, right? So, 35, the answer would be conservatism principle. The historical cost principle, it is also known as option C, both A and B, original cost principle or acquisition cost principle, because all these terms refer to the same concept of recording transactions at their time, at the cost of their time of acquisition. 37. Accrued income is recorded as an asset due to accrual concept, accrual income, accrual concept, because this concept requires recognition of income when it is earned regardless of when the cash is received. I've been telling this many times, right? I hope this would have got registered in your mind. So accrued income represents revenue that has been earned but not yet received. So 38, full disclosure principle requires disclosure of material information. Okay, so what kind of material information that would influence the decisions of users of financial statements? Not all information needs to be disclosed, only that which is very significant enough to affect the decision making. 39, which concept prevents mixing of business and personal transactions? That is entity concept, because it will prevent mixing of business. It's quite easy, right? I've already discussed about the entity concept. So 40, the treatment of research and development costs as expenses follows its matching and conservatism. Depreciation method should not be changed frequently. This is required by consistency concept. Should not be changed. So it's same. So it is consistency. The concept that requires recording transactions at their exchange price. So we have a new word, exchange price, what it is. So that is again historical concept. Okay, because the actual cost incurred when the transaction occurred. So this provides objectivity and verifiability to accounting records, as the exchange price can be documented through invoices and receipts. Right. So for 43, deferred revenue is treated as a liability because of all the concepts. Why all the concepts? So for accrual concept, because it recognizes obligations when they arise, right? So when it comes to matching concept, it's like matching revenue with the period when the services are performed. So for revenue recognition, recognizing revenue only when they are earned. So until all these services are performed, the receipt payment represents an obligation to provide future services. So 44, the assumption that the value of currency remains stable over time is stable monetary unit assumption. Why? Because meaning the purchasing power of money doesn't change significantly. This assumption underlies historical cost accounting, but it is unrealistic due to inflation and deflation. 45. Which concept requires the accounting principles, policies, once adopted, should be applied consistently? Again, consistency, because comparability of financial statements over time, it also prevents manipulation through frequent changes in accounting methods. The practice of not recognizing unrealized gains, that is a conservatism and realization concept. Why this is like, you have to be very cautious about recognizing gains. So when it comes to realization concept, it is recognizing gains only when they are realized through actual transactions. So 47, inventory obsolescence reserve is created following conservatism concept. Because inventory obsolescence is created following the conservatism concept, right? How do I explain? Say, this concept will require providing for probable losses. So including the potential losses from inventory becoming obsolete or unsaleable. So 48, the cost concept is also referred as all the above. We have seen it. So which principle requires expenses to be deducted from revenues of the same period? That is matching principle. Because this ensures that revenues and related principles are recognized in the same accounting period. So 50, the entity concept assumes that business has separate existence from owners. Yes. So 51, preliminary expenses are written off over a period following all the above. Matching, accrual, going concern. Because for matching, you can say the spreading cost over benefit periods that's been calculated. For accrual, the recognizing expenses when it occurs. So going concept, like we'll have to assume that the business will continue to run for a long time. So the concept that transactions should be recorded when they occur, not when the cash changes hand, is accrual concept. I think you are able to understand how the question has been evolving, because sometimes you see the question in one of the options, and in case if the concept has a different name, it is being asked in a different question, and most of the questions are being derived from the PYQ themes. So always make sure that you're thorough in the themes. So 53 contra entries in accounting are based on dual aspect concept, because these entries involve transactions that affect two accounts within the same book, like cash and bank, maintaining a dual aspect principle while keeping the accounting equation balanced. So 54, the periodicity assumption enables all the above: measurement of periodic income, comparison between periods, timely reporting. The why, by dividing the continuous life of a business into specific periods, stakeholders can evaluate performance and make informed decisions. Which concept justifies charging interest on capital in partnership accounts, that is entity account? I know that. Why? Because the business is seen as using the partner's capital and therefore pays interest for its use, right? So the assumption that follows that allows us to record transactions in monetary terms only is money measurement assumption. Why? Because the assumption it will form the basis for quantifying and recording business transactions in a common unit of measurement, that is money. So 57, provision for taxation follows which concept? All the above: accrual, matching, conservatism. I'm sure that you know. The revenue recognition principle is closely related to which of the concept? All the above again. 59. Creating secret reserves violates full disclosure principle. So 60. The assumption that permits us to prepare financial statement is all the above. 61. Which concept requires similar transactions to be treated similarly? That is consistency. 62. The dual aspect concept states that see, every debit has a corresponding credit, assets equal liabilities plus equity, right? So for 63, amortization of intangible assets follows all the above: matching concept, going concern, and cost concept. For 64, the concept that allows recording of estimated expenses is again all the three. Which principle requires that gain should be recognized only when realized? That is conservatism and realization concept. The separate entity concept does not apply to which one? It is none of the above, because a separate entity applies to all the form of business organization, be it sole proprietorship or partnership and company. So in all cases, business transactions are recorded separately from owner's personal transactions. 67, accounting period concept facilitates all the above: calculation of periodic profit or loss, comparison of performance, decision making. The assumption that business will not liquidate in near future is going concern assumption. Which concept supports the capitalization of material handling costs as part of the inventory cost? So that is D, all the above. Why? Because it is supported by the matching concept, cost concept, and full absorption concept. The practice of recording assets at acquisition cost follows again all the above. 71. Accrual accounting requires recognition of revenues when they are earned. The concept that prevents recording of non-monetary transactions is money measurement concept. Depreciation spreads the cost of an asset over its useful life following Again, all the above. Which assumption allows preparation of interim financial statements? It is periodicity. What does periodicity mean? Because it allows preparation of interim financial statements by permitting the artificial division of continuous big business operations, like into shorter accounting periods, say quarterly, half yearly, etc. The full disclosure principle requires disclosure in financial statements, including notes, because material information may be disclosed in the main statement or in the accompanying notes. So 76, creating provision for discount on debtors follow all the above, because providing for probable losses, I think we have already discussed all this. Just a derivation of the same question again. So 77, the assumption that currency has a stable purchasing power is stable monetary unit assumption. Which concept justifies treating owner's drawings as reduction in capital? It is entity concept, because it views business as separate from the owner, right? So 79, the realization concept requires revenue recognition when a sale is made. Because when goods are delivered or services are performed, right? Not when cash is received or goods are produced or the orders are booked. So 80, consistency concept helps in all the above: comparability over time, reliability of statements, better decision making. 81, the matching principle is violated when all expenses are charged to current period, because when all expenses are charged to the current period without considering which period they relate to, right? Because it gets violated. Expenses should be matched with the revenues. They help generate, which may span multiple periods, right? So 82, business entity concept treats business as separate from the owner. 83, the cost concept record transactions at historical concept. Which concept allows recording of estimated liabilities? All the above: conservatism, accrual, prudence, everything. 85, the dual aspect concept is expressed in the equation assets is equal to liabilities plus capital. We all know that. So 86, going concern concept affects the valuation of all assets and liabilities. The periodicity concept is necessary because all the above. Business has unlimited life, stakeholders need periodic information, legal requirements. 88, revenue recognition principle determines both A and B, when to record, how much revenue to record. The conservatism concept suggests, again, all the above: understate assets, overstate liabilities, not overstate income. 90, money measurement concept excludes qualitative factors. Like what? Like the employee morale, customer satisfaction, brand reputation, because these cannot be reliably measured, but and expressed in monetary terms, right? So 91, accrual concept ensures revenue and expenses are matched. The assumption allowing different accounting periods is periodicity. Historical cost principle records assets at the time of acquisition. So 94, which concept requires that uncertain losses should be recorded? Conservatism concept. The separate entity concept means all the above. Full disclosure principle ensures material information is disclosed. 97, the assumption that allows us to prepare annual statements is time period consumption. Materiality concept states that immaterial items may be ignored. The cost concept is related to initial recording of assets, because initial recording of assets at their acquisition cost, because while it may influence subsequent measurement, its primary application is in the initial recognition of assets. So 100, accounting concepts and conventions help in all the above: standardizing accounting practices, ensuring compatibility, providing reliability. Why? Because it should ensure uniform treatment. It also enable meaningful comparisons, also make financial statements dependable for decision making. So these benefits collectively will enhance the quality and the usefulness of financial reporting. Okay, I'm sure that you all enjoyed the session. In case if you have any other doubts, please let me know in the comment section. And thank you.